big part of my strategy today, I kind of went through this evolution, right? So when I first bought that building, the next couple of years was focused on buying a lot more multifamily, I would say, in developing areas around Boston, where I would still, basically kind of chase the cash flow, right? I mean, I was kind of on that cash flow Kool-Aid for a long time. And we were basically buying value add projects, right? So buildings that needed work or some sort of stabilization, doing that work and then, stabilizing it and then usually hitting pretty good yields. Now, what I found over the last, I'd say 2 to 3 years, I've kind of shifted that strategy a little bit and have kind of refocused from more quote unquote developing areas to more established and what I kind of call like high class B, class A markets in Boston, right? So, today I'm chasing deals in some of the best neighborhoods in Boston. The Cambridges of the world. For those of you not familiar with Boston, that's where Harvard, MIT are. Downtown Boston or neighborhoods within, Boston proper. And these are typically high price per unit multis, right? I mean, a lot of stuff we're buying today typically ranges, I'd say, from anywhere from like $350 to $500 and even $600,000 per unit, right? I mean, it's not cheap product. We're buying expensive stuff, but I think there's a lot of wealth opportunity if you know where to look for it, right? Because, our goal today is really, what I kind of call is indestructible wealth, right? Like that's really what I'm trying to do is build a portfolio that's just really indestructible and is not going to be, is going to be much more resistant to recessions, any major shifts, anything like that. And I think by going after the cream of the crop real estate, that's really where you kind of, where you build that wealth that a lot of people talk about, right? That isn't going to get hammered if, like we are right now in a small economic shift, or is, or anything else that might happen out there.